For today's trade recap for Rippy Global, we took the 45.65 calls, 0 DTE for July 20th. Looking at the initial chart setup, the focal point for the position called out was obviously we're on the 1 minute time frame for the candle formations, and we're focused on the trends after we hit in the moment the low on the day bounce at 45.42 level. The reasoning behind the 45.42 level, going off the 5 minute time frame right now, that was a heavy hold area going back to July 18th that held intraday, wick underneath that pulled back and held support, and that's where it uptrailed the rest of the day to high of the day. So using that level for today's entry, once we bottomed out at that level, the idea was to catch the trends in the motion of pushing back intraday into lunch hours to catch that momentum. So after the first bottom on, at the time, the low of the day at 45.42 area, we started to track the trends as they formed. In the moment, we were looking for a pullback to catch puts, but as strength held, as SPY approached to the VWAP, broke above VWAP and held, we were focused on catching the trends and the previous higher low or the previous higher high off the trend for a potential bounce, a resistance break that pulls back into support. Going off that ideal entry, we knew, and this was repeated to the members before the call out was made, if entry does break underneath this potential support hold, resistance to support flip on the breakout, this was also where the VWAP was on SPY. Using the confirmation of a VWAP hold, the resistance to support flip, that was the conviction to enter on a pullback for the 45.65 call on SPX. Going off entry, we wanted to catch a wick to the zone around 45.54 area. The entry was hit. We had a limit at 2.0. The limit was placed for this position when the contract was still at 2.5 area. So we were hoping for a pullback that held and showed strength. We trusted the chart. We trusted the initial consolidation before it broke earlier in the day. We were using strength to our advantage, also knowing that VWAP was holding SPY at the moment if it held that zone. Since we broke underneath that resistance to support flip, we're focused on now the trends holding to not sell the position for a loss that could still break to the upside. Since trends were holding, that gave the conviction to not sell the contract we entered. Entering at 2.0, the low on the contract after entering, which happened about 1 to 2 minutes after, it hit a low of 1.55. So per contract, if you bought in at the low after entering, you would have been down $45 a contract. With the consolidation going off the S&P chart, we trusted the trends of higher lows. We trusted trends. We trusted the chart. We were not focused on the fact that we were down. The stock was showing strength as it pushed higher and made higher highs and kept the trend on higher lows. Using the conviction and the idea of we have the high here. If we push higher, we need to break the red highlight I just put in, aka the new resistance after breaking above the previous higher high. Now we're focused on the next level, aka like the PT, so to say. As the S&P was showing strength, we were still holding the contract. As we broke above, we took the first trim at 2.6 for the 45.65 call on SPX. We took the trim at 12:09 Eastern time, and that was about 20 minutes after the fill from the 2.0. So we held down 45 a contract, consolidation. Once the S&P caught that buying pressure, the volume increased on the upside. We held trends off the higher lows. We trimmed for a $60 per contract trim. So every contract you had, the first trim was $60 profit. Using that, going up, as we're breaking highs, we use the level of 45.57 for a conviction. If we break above and hold, we have to trim more just in case we do reject and pull back to the trend. As we pushed higher, we took the last trim on our position at 3.0. From entry of 2.0 to a final trim of 3.0, the most we made on trims was 50% for this position. The contract ended up pushing to a high of 3.7 after our sell, only to sell off and never recontest those trims that we had the rest of the day. The conviction needed for this was obviously we focused on the historical higher high as the trends were forming, where I have this current purple highlight. As this previous higher high held, We watched for the next higher high to break above and hold off the trends. We were trusting the previous higher high as a support. The break above made it a resistance flip to support. Yes, we broke underneath, but that's where the trend line of higher lows comes into play. Trusting the chart, trusting the trends, trusting the price action. If we would have broken out of the trend, that was the logical first point for people to sell for a loss. If we did want to have conviction and wait to see if the chart held, we would have waited to see if the previous higher low held as a support. So if we were hypothetically to break underneath this trend, this would be the last indication to sell if we break underneath where this purple highlight is. Since we held the trend, that was never in the question, but going off of a stop loss, our risk would have been roughly, I'd say 1.2 to 1.3 a contract, which is roughly $70 risk. The final trim was a trim of $1 a contract. So risk to reward, obviously we did not sell red, we held for the trims. The low the contract went was 0.55, 1.55. The base of the buy was 2.0. So our risk in the hold was only down $45 a contract. The first trim was $60 profit. The final trim was $100 over the initial entry of $200 a contract. Risk to reward from the hold of the position being down 45 to selling the final trim at 100. That risk to reward is over a 2-to-1 reward to risk. For every trade you win with that kind of setup, 2 losses, you're still profitable because of the overall risk was 45, profit was $100.